Thanks for joining this session. We're going to start off with an introduction because of the panelists, I'm not going to introduce the panel topic because Anthony has done my job for me. So I will start off, I'll start off with each of them just introducing who they are, what they're working on. I'll start off with the gentleman on the right. I don't know whether it's because he just had a rebranding of his organization, that's why he's dressed down. But Naveen, why don't you start with you, speak about the work that you do at JPM.
This is how I'm usually dressed, Alan. But hello, everyone. I'm Naveen Mallela. I run Kinexys, what was earlier known as Onyx. We couldn't have picked a more opportune moment for the rebrand. So for those of you who haven't heard of Onyx, I'm imagining that would be a small majority. This is everything tokenization for JP Morgan as a whole. Yeah, lovely to be here.
Hello, my name is Lim Soon Chong. I'm the Group Head of Transaction Services at DBS. At Transaction Services in DBS, my team and I cover trade finance, security services, cash and payments. And of course, all of these are highly tokenizable, or the activities are highly tokenizable and can be recorded on decentralized or distributed ledgers. And so we are very much involved in the tokenized universe for many of these activities.
Hello everyone, my name is Alexandra Hachmeister. I run the new Director General Digital Euro of the German Central Bank Bundesbank.
Thank you very much. So we have one central bank. I'll exclude myself for now. And we have views, perspectives from two commercial banks. I think we will hear perspective on tokenized deposits, and also we'll be able to hear a bank's perspective supporting stablecoins as well. So I think we look forward to a very interesting and rich discussions. But let's dive deeper, right? Specifically on the specific products, maybe areas that they're looking at within the digital money space itself. We'll start off this time the other way around. Let's start with Alex.
Okay.
Please speak about the Digital Euro Directorate, what you're doing, what your mission is, and how you're organizing your work.
Okay. Thank you for the warm welcome. What is the Directorate General Digital Euro? It actually is the outcome of a strategic review of Bundesbank, where the decision was taken roughly a year ago to put CBDC at its core priorities. What we do is actually focus on two things. So one topic is for us the delivery of what we call the digital euro, which is the terminology for the retail transaction side. So that's really the digital payment means for citizens, households, and small retail transactions. At the same time, what we do is we look at the wholesale CBDC space. And what we do there is, as part of the Euro system, we are right now in an exploratory phase where we identify how we can, in trials and experiments, deliver interoperability solutions to the market with the market, actually. So it's a collaborative approach that we're doing, and we are making great progress, and I'm really looking forward to the final results of it.
Thank you very much. And now I'll turn to Soon Chong. So DBS has just announced, I guess, or launched the DBS Treasury tokens. Could you speak about that and more broadly about the space they're doing again in digital money?
Okay, so thanks, Alan, for the setup about DBS token services. But before I go into our tokenized money and value movement kind of activities, which I'll come to, I just want to talk about that when we think about digital value transfers, there are two types of systems, right? There are the public blockchain systems that we address through the digital asset ecosystem. There we have an asset securitization capability, a trading, a digital asset custody, as well as settlement against fiat systems capability. So it's the area of public blockchains. But to your point, the discussion more germane today about how we handle value transfers in a permission blockchain, I'll just say four things. The first is that about domestic payments, right? Domestic payments, as you see, tokenized deposits or tokenized payment instruments for domestic payments. We do two things there. There is for conditional payments and programmable rewards. And both of these are products and services, we call it under the DBS token services. There, because in domestic payments, largely the issue of speed and cost has been solved, particularly in Asia where real-time payments, the use of tokenized money for domestic payments must necessarily cover higher value-added services, such as programmability or creating efficiency for back-office operations. So that's the first thing. The second thing is what we call treasury tokens, where we worked with Kevin. Kevin was there on stage earlier, whereby we help companies such as Ant move value in a transparent and efficient manner, cross-border, across our proprietary network. That's for large corporate liquidity management. And all these are part of the DBS Treasury tokens. The third thing we do, of course, with our partners in JP Morgan, for cross-border, cross-bank movements, and the signature initiative there is Patio, that we are co-invested, and both Naveen and I serve on the board together, on Patio to reinvent correspondent banking and cross-border movement. And the fourth is we participate in CBDCs, ECNY, E-Hong Kong dollar, looking forward to ESGD at some point in time. And then we participate, whether it's for domestic payments or cross-border value transfer. So those are the things that we do, and the DBS Treasury Token Services forms a big part of the entire kind of portfolio of projects and initiatives that we pursue.
Yeah, so we'll come to the work that we are doing in Singapore just later on in terms of putting forward perhaps the work around having a common settlement assets as we look at, I guess, different forms of value transfer. But we'll start off with Naveen, just speak about the work that you're doing on JPM Coin and tokenized deposits. I believe these are two different products. Can you speak about that?
Yeah, I mean, I will talk a little bit more about our approach towards this. And just to pick up on the previous panel touched upon sandbox fatigue. The previous panel touched upon trying not to do too much too quickly. So that's been our approach as well. Our approach, ever since we launched JPM Coin, the first of its kind digital cash tokenized deposit 5 years back, the approach was of relentless pragmatism and commercial viability. So counterintuitively, what we've very deliberately tried to do was not trying to solve the hard problems. We were trying to solve the easy problems first. I think we felt that trying to solve the hard problem, which was what a lot of trade finance ecosystems were trying to solve. I mean, there is tremendous opportunity there, but those are hard problems involving a number of different parties and solving for ecosystems. Instead of doing that, we've picked up cross-border transfers. Cross-border transfers is a relatively simpler problem to solve. It is within our ecosystem. How can we make cross-border payments or cross-border book transfers within our ecosystem programmable? How can we make cross-border book transfers 24/7? And how can we generate value for our clients and generate value for the bank? So that was the very first thing that we've done. So the ability to optimize liquidity means that that's great for our clients, and the ability to attract net new flows is great for us. So that was the first dimension in terms of trying to solve the easier problems. The second one was about meeting the clients where they are today. We are not waiting for the clients to adopt wallet infrastructure and that to take off in a major way. We need to be able to meet our clients where they stand today, which means that we need to integrate with APIs, we need to integrate through internet banking, and we need to integrate through Swift, because we need to be able to onboard clients without too much of change management. So that is the second aspect. And then the third thing is, like, for digital cash or for digital money, reachability is the lifeblood. If with digital money you can only do niche use cases, you will never get adoption. So the ability to interact with current infrastructure, not just the new, the ability to interact with RTGS and clearing infrastructure will give you that reachability. So all of those three things are something that we've been very deliberate in our approach, and that has started to pay off in a big way, where our volumes have expanded tenfold compared to last year, and we expect that trajectory to continue.
So there's, just looking at the questions, one that came up, maybe just to, I guess there's interest to perhaps clarify some of the points just in terms of terminology, and also just to map with what is already existing in today's financial system. So the question, maybe Soon Chong, you can help us with this. What's the difference between, I guess, digital tokens and maybe I think the question was the dollar amount or the number that we see on our PayNow app or PayLah app?
Well, so we were just joking about it outside, right? We're just joking about it outside. What is digital money, right? Is it really what you see on your PayNow and PayLah, and what is really the difference between JPM coin, or what do you call that, and DBS Treasury tokens or tokenized deposits? So the way we think about it is, look, they are all digital representations of value. right? And the way that we typically think there are, and then maybe it's gone to this, right? The landscape, and let's just go a little bit of landscapes, right? Today we live in a hybrid landscape where the digital representation of money exists, I think, in 4 forms. First is a physical form, the note and cash that you see, but that's a physical form, not a digital form, right? The first is what we call totally decentralized ledgers. Crypto assets, stablecoins, they're recorded on public blockchains. They are totally decentralized systems. Then there are distributed systems, right, where typically permission blockchain, CBDCs, Patio, wholesale bank deposits are permission systems. Then there are digital representations in centralized ledgers, right? The bank basically promises that liability. The dollar that you see the PayNow app often is because on the bank recording it on a centralized database or centralized system, right? And when we talk about tokenized deposit, rightly, I think that you should say that the bank itself records the source of truth on a distributed ledger, not a centralized ledger. So that is the technical difference. And the difference of a distributed ledgers is that it can cross institution, cross boundaries, and then cross currency in a much more efficient fashion. I mean, that's the way I'll define it, but feel free to disagree. Right?
So if I understand you correctly, what you're saying is actually to the consumer, they may not feel any different, right? The transformation has happened behind the scenes. We're changing the pipe, so to speak. But
and if I may add, Alan,
yes.
Not just to the consumer, it is no different from a bank standpoint as well. The liability is no different from a deposit liability. The financial and accounting treatment is no different. To add to what Sun Chong is saying, the innovation is on the ledger. The innovation is on introducing the technology substrate on which these accounts are offered out of. And I mean, and what is the use cases that enables, that's a different topic, but I think it's worth bearing in mind that the innovation is on the ledger, not new forms of money or new product definition.
So, Alex, if you could expound on that. I think there's a question maybe on the interaction or the interface between the central bank and also the commercial bank, the interplay between the two, what's the role of the central bank, particularly in terms of providing or kind of thinking about the idea of a digital euro.
Okay, many questions at once. And I'll relate to something that both of you had said. I think, first of all, when we think of wholesale transactions today, I'd say the easiest, the secure, risk-free way to settle this is to settle it in central bank money, right? And the question that we're asking ourselves as central banks is, while the world around us evolves, right, and we see more and more digitization of different types of assets, how do we ensure that central bank money stays relevant and is actually compatible to what we are seeing? So the question that we ask, and that goes, comes back to something that you said about choosing a pragmatic approach. Right now, in the exploration that we're doing, and we're having our own Bundesbank solution, what we're actually doing is choosing a pragmatic approach. Because with the trigger solution that we have built, we're actually building a bridge or a plug-in. So what we do is we connect the conventional RTGS system with the digital ledger. So what happens is we allow that the digital ledger can evolve, but at the same time, we connect it to what we have already. And that means we don't fragment the markets, and we use what we have. So one could say, well, you're not using cash tokens, but I would say we don't need them right now, because what we have is a very elegant solution that actually allows that the transaction that is triggered on the asset side is automatically, with no manual intervention, then triggered on the cash side in the RTGS. So this is coming back to the pragmatic. And if we look at the interrelation between central bank money and commercial bank money, we have on the retail as well as on the wholesale side, we always have a two-tier system, right? So there's central banks and then there's commercial bank money. And I think the most important aspect that we have to discuss how we bring solutions there is actually the B2B world. Because in the wholesale it's pretty clear. We have established structures. We will figure out if what we have in terms of interoperability solutions will be good enough, or if we actually need cash tokens, that's something that we can figure out actually together. But when it comes to B2B, I think there's the point that we make sure that we have riskless cash as well.
All right, speaking on B2B, perhaps if we can maybe switch gear a bit away from retail, let's talk about maybe on the wholesale and particularly on the cross-border side. I'm going to turn to Naveen because I think that's something that you've been looking at it very deeply, and then I'm sure Soon Chong would add on to that. Just if you can expound on maybe taking that a bit further, what are the considerations on a cross-border basis with digital money?
To add to what Alex has said, right, like we completely agree with that approach, right, like as DBS introduces DBS token services, we have Kinexys, City token services and so on. What is missing is the fungibility. How do we create fungibility amongst these different commercial bank liabilities? Central bank money is what ensures the singleness of money. And there is an urgent need for solutions of this kind, and we really welcome trigger solutions. Do we need a CBDC for this? Perhaps not. What is required is the ability to have synchronized settlements between commercial bank liabilities and central bank liabilities. So definitely second what Alex is saying. Now, what is different with tokenization for cross-border payments is the aspect of atomicity. We already have instant payments. What we don't have is atomic payments. And the key difference is about the synchronized update of various ledgers rather than the sequential update of ledgers. While it could sound like a very technical point, it is actually a really important point, because if you achieve synchronized update of ledgers, you get rid of reconciliation. You get rid of the need to have liquidity at multiple points. So it just removes some of the key friction points in cross-border payments. And the only thing I would add is that while there is so much focus on settlements, inordinate amount of focus on settlements, there's not enough focus on liquidity. Like instant payments requires instant liquidity. How are you going to source the liquidity, right? Like, and that is where some of the work that we're doing in capital markets, whether that is intraday FX swaps or intraday repos, those come into being. And also solving for payment exceptions and payment failure is also critical. That is where pre-validation, pre-screening. So you need to look at all of this in conjunction, not just solve for the settlement problem, even though that is one of the key problems.
So it's always difficult to come after Naveen, but let me try, right? So, so let me bring back to cross-border. He's covered about cross-border payments, about cross-bank, and how you interoperate between the central bank and the commercial banking world. But if you bring back the broader issue about which I think, Alan, you're going, which is how do we build interoperable cross-border payment systems across different types of monetary systems, right? And that's M0, that's M1, and let's not forget that what we talked about, there are distributed and decentralized systems out there other than commercial bank money and central bank money. So if you just go back to the statistics of this three-layer framework I talk about, right? Today, when you think about what is commercial bank deposits, according to McKinsey, it's about 110 trillion, right? Tokenized deposits is 1.1 trillion. Stablecoins, 170 billion. Cryptos, 2 trillion, thereabouts. It fluctuates with markets, right? So about 3 trillion worth of things that are tokenized, right? And we're talking about trying to tokenize the rest of the 97% and try to make them as fungible as possible. Now, but when you look at these coin systems, if you look at cross-bank, I agree with everything that Naveen has talked about. But when you looked at across stable coins, cryptos, and commercial bank money and central bank money, then you need to factor in two other considerations. The first is that the fact that the payment system and money doesn't exist in isolation. The first is about macroeconomic control. Right? Money has always been used as the factor of monetary control by central banks and sovereign jurisdictions. And there are two important policy levers that central banks want to use. First is monetary policy and fractional reserve system to create credit. And the second is capital controls. Right? How are you going to incorporate that into these monetary systems? The second issue is about multilateral sanctions. Let's not even go to the space of unilateral sanctions today after the Trump likely victory. But let's just talk about multilateral sanctions, about UN sanctions that I'm talking about. A large part of the complexity that Naveen talks about in this is about anti-money laundering and multilateral sanctions upholding in payment systems, in cross-border payments in particular. So when you incorporate these two considerations into how money is going to be interoperate, fungible, and be interoperate, you need to factor all these into consideration. And I would say three things that we need to take account. The first is clearly standards, right? Rich text format, ISO 20022, what SWIFT is driving on CBPR+. We need that to incorporate in all the payment infrastructures and all the monetary systems. So number one is standards. The second point clearly is I think we need more market infrastructures, not less. And Naveen alluded to it. It's not just about payments and settlement. It's about how do you then have digital identity market infrastructures? How do you have compliance infrastructures like Cosmic, like what BIS has proposed around Mallela? You need those market infrastructures to facilitate efficient and effective interoperability. And the third, if you really overlay that, is that really I think that what Alex was alluding to, you need a very clear set of network hierarchy rules. Today, all monetary systems that have a public and private interaction have these rules. What central banks can do, what commercial banks can do, what payment service providers can do, right? And in the blockchain world, I think you will need that. And just give two examples. The first is really, of course, Partior. We're very clear from the time being that we have actually very clear criteria, obligations, and permissions, including payments data permissions of what is a settlement bank in Partior, a participant bank in Partior, a PSP in Partior, and as well as a corporate user in Partior. You need to be very clear about these things. Then using another example, ECNY, not the only example. They're very clear about who is level 1, who is level 2.0, what is level 2.5, what is level 3. And when you begin to put all these systems in the operability together, you need to say these systems and these participants and intermediaries interact at what level with what kind of obligations and permissions. And so I think that there is still a lot of work to do before we can talk about interoperable and fungible money across different kind of centralized, decentralized, and distributed ledgers.
Okay, just building off maybe two of the points you made around policy and infrastructure. I'm going to turn to Alex first on the policy piece, and then Naveen, maybe be good to hear from your perspective on the kind of infrastructure that's needed to support what Chong has mentioned. So on the policy side, Alex, maybe if you could speak to us, just as a role of a central bank, just managing maybe the different considerations and the policy considerations that Chong has mentioned, but if you could also expand maybe just from the Bundesbank perspective, how are you going about this piece of work?
If we look at policy and if we look at regulation, whatever the last 2 decades, I think what we have seen in terms of innovation was a bit like Tom and Jerry, cat and mouse game, right? We have highly innovative financial industry, and then we have an answer by regulators to it, in particular when things don't turn out as they were planned. I think what we're doing right now, and I think that is a very strong approach, is to say we are trying to do it jointly and really choosing a cooperative approach. So I think we have to make sure when we're setting policy goals that they are in sync with what we jointly want to achieve, right? And obviously as central bankers, for us, stability, there's nothing that we will not do anything to not try to achieve that. However, I think that is in the whole interest of the whole system, right? Because then it comes back to what you just said. We need clear roles and responsibilities, checks and balances in whatever we design. So I believe actually that while we allow the market to evolve and experiment with new types of assets, for example, we have to make sure that we agree, are we working in a pilot regime? Do we have a regulatory regime already? How is that organized and who does do what? And in Europe, for example, we have set up a pilot regime for that, right? So we say this was introduced 2023, this is for 3 years, it can be prolonged for another 3 years, and we will learn while we do it, do we really need a new regime? Or is it with everything that we have, is this about tweaks and adapting a bit? So that would be probably what I would think about policy here.
Naveen, infrastructure?
Infrastructure, again, Chong made all the points, but the only thing I'd like to add to that is, what is different about digital money this time around? If you look at the evolution of money, when we started off with cash was great, right? Like it was very convenient. I mean, you could do peer-to-peer. Cash is brilliant, but it doesn't travel very far. And you can't impose controls around how cash moves, all of the points that Chong touched upon. That is why we locked it up in ledgers, and we have operators managing those ledgers and how those ledgers are operated. This revolution of digital money is about liberating the money from those ledgers while still having those controls. It's about making money available digitally wherever it is required. Because of this lack of capability, payments have become out of band with the underlying economic activity and with the underlying financial activity. So a lot of work that we are doing with digital money is making money available in this various financial infrastructure. whether we are there yet, where commercial bank money or central bank money can reside natively in all of that infrastructure, I think the jury is out. But what we are enabling through trigger solutions, through what we are doing within Kinexys, with synchronized settlements, is trying to remove this notion of money moving out of band with the underlying economic activity. How can we bring it more in sync? Synchronized settlements is something that we are very actively driving towards.
And I'll just add from a Singapore perspective, certainly this is an area that we are looking at. So one of the efforts and announcement that we've made was the intent to provision common settlement assets, including the Singapore dollar wholesale CBDCs, to support market testing purposes. So certainly look forward to participation by eligible financial institutions on this front. I think we have about a minute or so left. If you can maybe just respectively just speak about your perspective, just a few points, maybe 2 points I'll give you. One, what would you look forward in terms of priorities for next year, right? And second, let's just go with one. Priorities for next year, what do you wish for? Maybe we'll start with Alex first.
First priority would be getting things into production, right? I mean, we're in exploration now, and my idea would be we are in productive systems doing this, but I would like to see this go live, actually. But this requires some discussion in the Euro system. So that's probably one priority, but a big one.
Chong?
Well, two things. The first is from the policymaker and regulation side, I think I always say even regulation and thinking around the various types of money issuers and payment providers side. That's always been one of my major issues, whether is it real-time payments or in this world of digital ledger technology-based money. The second, of course, that we said the opportunity is huge. We're all in the early stages. You just look at commercial bank money, 110 trillion, 2 trillion has been tokenized. Means that many commercial banks and central banks, even though we talk about pilots, have not tokenized their liabilities and their money. There's a lot of potential. We need to continue working at it, advocating for it, and then also making sure that the systems continue to build networks that are scalable. And then, like Naveen said, for payments to serve society in a compliant fashion, right? Yeah.
I'll just give one. While we have a lot of patient capital, our singular focus is commercial viability. That is what we are myopically focused on, commercial viability and scale.
All right, thank you very much. And I think we had a couple of insights. I'm sure they have more to share than we have time for. So with that, I think we'll end. We'll hear from the next panel, which will speak about some aspects around operational considerations around compliance. So with that, please join me in thanking the panelists.